Hello, everyone, and welcome to the show today. Today, we're diving in. We're going to be talking about business credit. We're going to be talking about things that you might not know that business credit can do for you and a lot of the benefits it provides that can help make it easier for you to get the money you need to grow your business. So if those of you that don't know me, my name is Ty Crandall. I'm actually the CEO here at Credit Suite. And at Credit Suite, we help you get capital. We do it three ways. We help you improve your fundability so you know what it takes to get approved before you apply. We help you with all aspects of building business credit for your EIN that's not linked to your social. And we also help you with all different aspects of accessing loans and credit lines for your business, where we put all funding sources in one place. So if we can help you at all with getting business credit or financing, feel free to give us a ring at 877-600-2487. All right, so let's dive in. So remember, when we're talking about business credit, we're talking about the credit that's linked to your business's EIN number. It's not associated with your personal Social Security number if you do it correctly. Okay, if you're providing your Social Security number, providing a guarantee, providing your credit check voluntarily, then it could be. So you got to do this the right way. But if you're building corporate credit the right way, we're getting credit for your EIN that's not linked to your social. Okay, so what you're ultimately doing is separating that credit profile, right? You have a commercial credit profile for your business. You have a consumer credit profile for you as an individual. So this is the only legal way to really create two separate credit profiles. You have one as a consumer, and then you have one commercial for the business as well. So the scores are definitely different between these two. Not a lot we're going to talk about with scores, but I'm going to talk about one of the huge benefits you get because it's so easy to get good scores in the business world. It's also very easy to get bad scores. And we'll dive in and talk a little bit more about that as well. So remember, we're talking about this credit in the business's name and based on the business's ability to pay, not the business owners. So what's happening is since the business qualifies for credit, then when done right, the personal credit's obtained without any kind of personal credit check required from you at all. And that also means you're not personally liable. So a couple of benefits here. Let's talk about this. Whenever anybody tells you you can get money without a credit check, you should be skeptical. Okay, I'm skeptical when I hear that. So how it's possible in the business world is this. You're building a credit profile and score for your business. Once that's established, then what happens is you're moving on to apply for high limit credit cards, let's say a $10,000 Visa card or a $10,000 Amazon card. You're getting that credit without authorizing a personal credit check. So what happens is you're forcing the credit issuer to then look at your corporate credit profile instead. They don't do the personal credit check. They pull your business credit. They see that you have a credit profile, a score, and some accounts or trade lines in that profile and score. Hopefully you paid those bills as agreed, and they then make the credit issuing decision based on that information alone. So since your business is now established its credit profile and score, you're able to get approved without a personal credit check because the business is basically able to stand on its own to be able to start qualifying for that credit. So this is really where you get to a point where you start also, as I mentioned, separating liability. Okay, look, we know that people like Michael Dell isn't guaranteeing the credit lines that Dell gets. Now, we think it's because Dell is big, but that's not the case at all. If you look at Dell, you'll see they have like 130 plus trade lines on their business credit report. They have very well-established business credit that proves that the company can pay its bills, and they have so much credit established that the owner, that's not even needed. They don't need the owner's social and the owner's guarantee. The business is the asset. So that's what you're ultimately doing with business credit. You're creating a scenario where the business can fund itself. The credit profile and the score become the asset of the business, and that asset becomes so much more valuable than your personal credit that when done right, there is no personal credit check, but the other benefit is there's no personal guarantee. So you're not personally liable for the business debt. If you were to ever default, if anything were to ever happen, they can come after the business legally, but not you. So again, I'm not an attorney, this isn't legal advice, but that's how personal liability works, is that if you're not signing as a guarantor and the company is the one getting the credit card, then if anything happens, then the credit issuer could sue the company but can't sue you individually. So you're not personally liable for your business debts. So why do you want business credit? Well, all major businesses have it, okay? Whether it's Warren Buffett or Oprah Winfrey, Bill Gates, any of their companies, they're not risking personal assets when their companies borrow money. They don't need to provide a personal guarantee either because their businesses have credit. And again, like I said, this is one of the common misconceptions here is that people think just because these companies are big, they qualify. But if you pull any of these companies' credit profiles, which you can easily do, in all my demo presentations of our finance suite that helps you through the process of building business credit and getting financing, I show you the snapshots from all these companies' credit reports. I even come in and show you Pixar's credit report in my demo because it's publicly available information. So these companies are building these credit profiles that's in helping them get the credit and financing they need to grow those businesses. So a lot of benefits here. Some we touched upon. One is you're creating a barrier between your business and personal assets. So what business credit does is you're basically separating the business from you personally. You're creating a barrier so your personal assets can't be touched. This is even if your business goes into receivership. So just because your company goes bankrupt doesn't mean you have to as well. Okay, and that's one of the huge benefits. Now, I can tell you from personal experience, the reason I'm here teaching you today is that the first business I ever owned was a mortgage company. Things were great. Then the whole economy crashed, completely out of my control. Didn't see that one coming. My business went from very successful to complete failure. What happened was I personally guaranteed things in the business's name. So when the business started, I personally guaranteed things in my name for the business. So when the business started to default on some of those things and those credit issuers went and got judgments, they literally came and took all of the money from my personal bank account. So my ability to recover from that was very difficult. I almost pushed me into personal bankruptcy. I mean, I paid for the bankruptcy and just never filed. And it all happened as a result of them taking all my cash out of my accounts for business debts. That's what happens when you mix personal and business assets. And that's, again, why you want to create this barrier between them to keep you safe. The next benefit is that you want to save your personal credit utilization. Okay, first of all, your personal credit is used for personal expenses. This is what it's designed for. So using personal credit cards to pay business expenses is really going to hurt your utilization rate. And by utilization, I mean that's the amount of credit you use or the amount of balances you have in relation to the total amount of credit limit. Now, that's said that you want to keep the percentage lower than 30%. But here's the reality. The reality is the minute you start obtaining or your utilization goes up, your scores are affected, even if it's 5%, even if it's 10%. As a matter of fact, the experts in this space say to keep your balances less than 2% of your limits. So you really don't want to get any balances on credit cards. The higher the balances, the lower your scores go, but you definitely want to keep those balances below 30% of your limits. So handling business expenses with personal credit makes it nearly impossible to do because businesses spend a lot more money than you do personally. And that's the problem. Personal credit limits are much lower than business credit limits because personal credit limits were designed for you to use it as an individual. When you try to use personal credit cards to fund a business, you quickly max out those credit cards. And since 30% of your score, almost a third of your entire FICO score as a consumer is based on this one factor utilization, when you start accumulating balances, you dramatically lower your scores. Think about this. The math of FICO score, 35% of your consumer FICO score is payment history. 30% is utilization. FICO is telling us that they score the utilization, the balances you have almost equally to whether you pay the bill on time or not. It's that much of an impact on your consumer credit. And this is why you never want to use personal credit cards to fund a business. They're not used for that, but they're not intended to be used for that. When you do, you dramatically lower your scores. So another huge benefit is that you're ready when times get tough. You got to prepare for lean times. For a seasonal business, well, you're already used to this. You know you have slow times during the year. But every business can go through these leaner times. And if you have to make payroll or equipment payments or rent, well, then business credit can help you get by in those times. So by establishing your business credit before you actually need it, well, then you're far more likely to get better terms or even credit at all. So look, one of the biggest myths that's out there is that lenders don't lend you money when you need it. Well, the reality is nobody lends you money when you're desperate, because when you're desperate, those are the people that are less likely to pay you back, to pay people back. What lenders and credit issuers want to see is that you are preparing ahead of time, that you are getting money before you need it. And when you do that, it's easier to obtain that money. The other thing about business credit is, even though it's fast to build, and we'll talk about that, it also does take time. It still takes time to build. You still are going to dedicate, 4 or 6 months, even as our client, to get to the end. If you're not a client, you maybe go 2 years or more to get to the cash credit, the auto vehicle financing that you want. So you've got to make sure that you start this before you need it. By building business credit before you need it, it helps you get the credit cards and revolving credit you need to get through tough times. But it also helps you build that credit profile and score that's going to make you more lendable and make it easier to get loans and credit lines as you need them, or even some of those before you need them as well. Another huge thing is that you've got to establish that credit history to really tap into it. So remember, credit history is one of the components that the credit reporting agencies use when calculating business credit scores. The longer the credit history you have, the better some of your scores are going to be. So when you consider what credit score is actually needed for a business loan, well, then you need to make sure that every positive item you can get is on that credit report, and you need to start early to do that. So again, you don't want to wait to build business credit until you actually need it. You want to start getting these accounts on there as early as possible, benefit from the score bump you get in that, and also as a result, have that money readily or have that credit profile established before you actually need it. So the IRS says you're not a business if you don't have an EIN, right? So you really need to have an EIN. Then you're told that your business is credible. It's not just a hobby. So look, your social security number in the United States is used to identify you as an individual of the IRS. The EIN number in the United States is used by the IRS to identify your business as a legitimate entity. So if you're going to be a legitimate entity, you need to have an EIN. Even as things like sole proprietors, you might not need one. So again, as a result, the IRS is already treating you and your small business separately when it comes to tax liability when you don't have an EIN. So if you're still floating interest-free loans to your business with your personal credit cards, well, then you've got to cut that kind of stuff out. Because again, if you want to be seen as a legitimate business, which is what's needed for you to get loans and credit lines and credit cards, then you have to have the basic foundation of a legitimate business. And one of the core components of that is getting the EIN, which is also one of the core components of building business credit as well. So now trade credit's really going to help you as you're building business credit. So use it. Okay, starter vendors are how we typically start building business credit reports and scores. Now, as a consumer, you're using secured credit cards typically. There's not a lot of secured credit cards in the business world, Wells Fargo being one of the most popular. So people start building business credit by using what are called starter vendors. Okay, vendors report at least one account or more to a credit reporting agency. And these vendors virtually never turn people down. So there are places like Uline, and there are places like Quill and Gimpler and Granger, where they'll give you $500 to $2,500 credit lines that you can then use to ease your actual expenses for the business. So I'll give you an example. One of our clients actually used vendor credit to buy marketing flyers and to buy yard signs. They used that to fill an event that then they sold their tax services for. And that's what got their business off the ground. They did over $1 million the first year because they used vendor credit to pay their initial advertising and marketing expenses. Then they followed suit. They continue to use business credit to fill these seminars. And that's how they got the money they needed to do other kinds of advertising. That's what vendor credit and trade credit can do for you. It eases cash flow. They didn't have to use cash to do that. They used their credit that was issued to them. And in using that credit, they were also building business credit at the same time. So dual benefit, ease cash flow while building business credit, giving them the ability to buy the things they needed to buy to get the business off the ground. Okay. And in doing so, build a credit profile and score that made them more lendable. So another huge benefit is that it makes it easier to work with your actual bank. Okay. Business credit means you can eventually get a bank loan for your company. Now, don't get me wrong. I'm not going to sit here and tell you that just by building business credit, you're going to go get a loan. That's completely not true. Business credit will help make you lendable. As a matter of fact, you cannot even get an SBA loan without having business credit established. So it helps make you more lendable. But when you get into bank loans, it's not going to be the only factor they're going to look at. So if a business opportunity is just too good to pass up, you often need to act quickly, but you might not have that kind of cash on hand. So establishing business credit basically makes it easier for you to get credit lines and loans. Look, even the biggest alternative lender in this country, On Deck, which is the biggest revenue cash flow type lender, which is the only one that's publicly traded, even they turn people down for business credit. I have a 6-inch stack of denials from On Deck for turning people down because of business credit quality. Again, so it becomes very, very, very important that you're building business credit, because by doing so, that makes it easier to get the kind of financing you need when it comes time to get credit lines and loans. So your payment history matters a lot when it comes to business credit. It affects your business credit score more profoundly than anything else. But the great thing is that if you pay your bills on time, well, then you're going to have good business credit scores. The scores are only based on how you pay. So as long as you pay your bill on time or early, then you will have good business credit scores. So establishing business credit early means you have that many more times opportunity to have a good payment history. Again, you're not backing against the wall where you desperately need money. By doing this early, you're actually coming in and establishing this credit profile, establishing a payment history, showing that your business pays its bills on time, which makes it easier to get the credit and financing that you need. So think of it like this. You're not going to go apply for a consumer loan, mortgage, car loan, credit card without them pulling your consumer credit. Like, that's ridiculous. It's the same thing in the business world. If you're applying for a business credit card, a loan, if you're applying for credit lines, they're always looking at your business credit history. Now, you might not know this because the Fair Credit Reporting Act requires as a consumer that if somebody pulls your credit and denies you, that they notify you by writing that they did. But the Fair Credit Reporting Act doesn't apply to business credit. So what's happening is credit issuers and lenders are making all kinds of decisions based on business credit quality that you don't know they're making. Or you don't know that they're even using that information to make that decision. So the key is to build a payment history, what we call trade lines. By getting credit, adding these trade lines, you establish this credit profile. And the more accounts you have on this profile, the higher the recommendation of credit from the reporting agencies, and the easier it is for you to get the business credit cards, loans, and credit lines that you're looking for. So another cool thing that we kind of touched on was how high the limits are on business credit accounts versus consumer credit. Look, businesses have a much greater need for money than consumers do. Okay, I was sitting with our American Express rep, and I think we spent over $1.5 million on American Express last year because we put all of our expenses on it and then we pay it off. Okay, so again, I would never spend that much money on a consumer credit card. This is the way businesses are run. So businesses have a much greater appetite for capacity or greater need for capacity on these than you will find as a consumer. That's why the approval limits are so much higher on business versus personal accounts. As a matter of fact, per SBA, limits are 10 to 100 times higher on business credit accounts than consumer. So why does this matter? Well, let me give you an idea. Okay, some of the initial credit that a lot of our clients get include Walmart and Amazon, right? Let's be honest. Walmart and Amazon sell almost everything you could possibly need as a business, right? You got Staples and Office Depot, and if you're flipping properties, you have Lowe's and Home Depot. If you're a trucker, you've got WEX and Fleet Cards and BP, Chevron, Sunoco. So what happens is when you start getting credit as a consumer, maybe your limits are like $500. In the business world, when you start getting your first revolving accounts, they're typically $2,000 to $5,000. Those are your starter accounts that you start getting when you first start getting revolving store credit cards. The highest I've seen is about $40,000 on a revolving store credit card like Best Buy. You're probably never going to get $40,000 on a store credit card with Best Buy as a consumer because, like, why would you ever need to spend 40 grand worth of stuff at Best Buy? Although they do have a lot of cool stuff. But as a business, you're probably going to need to spend a lot more money. So the benefit is you're getting these $10,000, $20,000, $30,000, $40,000 limit credit cards at Best Buy and Amazon and Walmart and gas cards. So again, those limits make it easier for you to be able to fund the business using your business credit to do so. So there's also, as I mentioned, no personal credit check. So when done right, you don't have to supply any kind of personal credit check to get approved. Now, again, nowadays, they're making you put the Social Security number on the actual application for identification purposes only. As of June of 2018, that's a new requirement from the government to try to avoid or try to prevent money laundering by verifying the person that's applying for the bank credit card or for the actual or for anything to do with banks, including bank accounts. So there are no inquiries on your credit report when you're building business credit. And business credit being built quickly regardless of personal credit qualities we talked about. So there's a big deal here. Inquiries count as inquiries eat up about 10% of your business credit score. The problem is in my world, the business funding world, you know, one inquiry, two inquiries can cost you $25,000, $30,000 in funding. I mean, we have credit lines that even one or two inquiries can rule you out of getting them. So you really, really, really need to minimize the inquiries that you have as a consumer or on your consumer credit report. The more of those you have, the harder it is to get business financing, not to mention that you're lowering your credit score. And then, of course, if you have bad credit, well, business credit's a no-brainer because you're building a credit profile and score for your business so you can be judged based on that credit quality when you're trying to get money versus your personal credit quality. Now, again, when you go to get loans and credit lines, they're still going to look at your personal credit. You're able to get these high-limit business credit cards regardless of personal credit. They're not even pulling your personal credit for approval. And on loans and credit lines where they are pulling your personal credit, the more business credit you have established, the more that's looked at to override some of the damage that you have on your personal credit. So business credit does not happen automatically, though. You got to know. You must actively work to build it for it to happen. Now, it can happen the right way fairly quickly if you know what to do. Okay, and as I mentioned, vendors are a large part of that process. And building professional credibility makes a real difference. So when it comes to getting any kind of money, you've got to look credible to lenders and vendors, okay, and credit issuers. You need a professional website. You need a professional email address. You need to have a phone number, a fax number. Get that phone number listed with 411. Okay, you should get a toll-free number as well. These things just become really, really, really important. So building business credit the right way, another huge benefit here is that you're setting up your business credibly, which makes you more fundable with lenders as well. Okay, you should set up a bank account because business credit cards are going to ask for bank references. You need to have any necessary licenses that are out there that you were required. Sometimes your state, your county, your industry, and you need to make sure that all your information is listed correctly on all of that as well. Okay, you need to have the same business address and phone number and correct spelling of your name on your licenses, on all your documents, on all your online listings as well. Of course, we talked about the EIN. It's important. You need to get that from the IRS, and you should consider a corporation or an LLC. Look, what are the benefits of business credit? Separating your liability. You're not personally liable for what goes on in your business. But if you are a sole proprietor, if you are a court, or if you are a partnership, you and the business are one and the same. So if anybody sues the business, they're suing you automatically. And again, I'm not an attorney. It's not legal advice, but that's what happens. Sole proprietor and partnerships, you are the business. So if the business gets sued, you get sued. So you want to choose a corporation or an LLC to avoid that. Or if you are going with a sole proprietor, well, then at least do a DBA so your name isn't the actual business name. Another good thing to know is that as a sole proprietor, the IRS says you have a 1 in 7 chance of getting audited. And as a corporation, you have a 1 in 50. So much less chance of getting audited if you are an actual corporation as well. So corporation or LLC. Now, one of the things you're going to want to do is you're going to want to get set up with Dun & Bradstreet. Again, huge benefit of business credit is that it's your credibility. Since it's public-facing information, lenders, credit issuers, suppliers, potential investors in your business, all these people and anybody that knows how to access business credit reports are doing so to learn about your business. So you want to go to D&B's website to get that DUNS number. You need a DUNS number and a few accounts reporting with D&B to be able to establish that paydex score. Okay, you also want to search Equifax and Experian's websites to see if they have anything about your business as well. And you can do that at creditsuite.com/reports. Now, since this is your credibility and having business credit as your credibility is a huge benefit, you need to make sure that you check Equifax, check Experian, check Dun & Bradstreet to see if anything's reported. Dispute to fix any inaccuracies that you have on the credit report. And as well, you also want to make sure that there's nothing negative on there or your scores aren't low to begin with, because Experian and Equifax will give you low scores even if you have no business credit established. Just the fact that you don't have business credit then makes you high risk. So you can do that search at creditsuite.com/reports to see what's on there and check it for accuracy and see how complete that information is. Now, you're also going to want to start with trade lines. We talked about these are these vendors. Vendors will give you terms like net 30. They will approve almost anybody with minimal effort, but you need starter vendors that report to the business credit reporting agencies. And once you do that and you get the credit, you start using it, well, then you need to start monitoring. You need to see these accounts reporting on your business credit reports. And again, as we talked about, if there's any inaccuracies, you want to get those corrected right away. Now, you can go to creditsuite.com/monitoring, and I have a larger link here. But if you go to creditsuite.com/monitoring, for only $24, you can get Experian and D&B. To give you an idea, you can go to D&B Direct at $149 a month. You can go to Experian Direct at $49 a month. So you spend about $200 a month to monitor Experian or D&B. It's only $24 at creditsuite.com/monitoring. So that'll help you keep an eye on your business credit reports and do so very affordably. And by the way, another benefit there on that page is you'll find the only access, the only way that you can now add utilities to your business credit reports. So with Experian and CreditSafe, you can actually add your cell phone, your electric, your water, your gas. You can add all your utilities and your cell phone to your business credit reports as well. Now, again, as I mentioned, you can go to D&B Direct, you can go to Equifax or Experian Direct. Just keep in mind that you're going to have prices involved. I mentioned those. Equifax is about $20 a month to monitor them. Now, if there are any errors, correct them. If there's anything incomplete, then you want to use a service with D&B called iUpdate. With Equifax, you want to go to equifax.com/business/small-business. And with Experian, go to experian.com/small-business. And that'll kind of help you start to get access to address errors. Now, we've got more training on our YouTube channel at youtube.com/creditsuite on the exact process to fix business credit if that's something you need to do as well. Now, with 5 to 8 of these vendors reporting, you can then get store credit. Staples, Office Depot. Okay, Lowe's, Home Depot, Sam's Club, Costco, BP, Chevron, Sunoco, Best Buy, almost every major retailer out there offers business credit. So you want to then start getting the credit that's revolving with these retailers. I call this the retail credit tier. So you want to use your EIN on these credit application. Amazon, for example, reports to all 3 reporting agencies. And again, you're going to need accounts established, or you're going to have to show longer time in business to get approved. So here's a myth of business credibility. A lot of people think that you must be in business 3 years or have 1 million in revenue to get approved without a personal guarantee and credit check. I get it. If you look at a lot of their pages, like Staples or Office Depot, they clearly tell you that on the application page. Now let me tell you how it really works. If you have a lot of trade lines on your business credit report, 5, 10, 15, the more of those trade lines you have, the easier it is to get this credit regardless of your time in business and regardless of your revenue. So I always say, you show me a business with 15 accounts on their business credit reports, I'm going to show you a business that's going to get approved regardless of whether or not they have 1 million in revenue and time in business. But keep in mind, if you do have 3+ years in business, if you do have more revenue, then it makes it easier to get around these guarantees with fewer trade lines. But either way, you're able to get it. It's just a matter of how many accounts you have reporting on your business credit reports. And once you've got that handful of vendor accounts and started to get store credit, now you're moving on to fleet credit with about 8 accounts on your business credit reports. This is Sunoco and BP and Chevron and Pilot Flying J. You're basically using this to buy fuel and repair and maintain vehicles. Okay, and you're going to do this using your business credit without personal credit checks or guarantees. So there's a couple things here. Fleet credit, if you work in an office like I do, this doesn't really apply to you. I don't have a fleet credit card. I don't have any fleet credit cards because I don't have a fleet of vehicles to use them for. But if I'm a trucker, like many of our clients are, well, then this is perfect credit because this is what you're using to fill a gas tank. It's what you're using to fix the vehicle. So what's nice about business credit, one of the huge benefits is that you're able to get the kind of credit that you actually need. If you're flipping homes, you're getting labor ready to get labor. You're getting Lowe's and Home Depot to be able to go out and actually get supplies and all the building materials you need for fix and flip. You're using Visa cards and MasterCards to liquidate those cards to use cash to buy property. If you're working in an office like I do, well, then you're using Staples, you're using Amazon, you're using Walmart, you're using Office Depot. That's where you're buying your office supplies. That's where you're buying the furniture, the things like that you need. You're able to come in and use IKEA. You're able to come in and use HP and Apple and Dell and get the credit for computers and everything you need. If you are working as a, whatever industry you may need, it's different. So the kind of business credit you get really depends on what kind of industry you're in. But fleet credit's really good if you're in transportation. Now, next is cash credit. So this is where you have a history of handling credit responsible. About 15 accounts is what you're going to need to get here. 15 accounts reporting on your business credit reports. MasterCard, Visa, Amex. Okay, again, nowadays, a lot of the major credit issuers coming in for banks are going to ask Fast Social. Okay, but you don't want to authorize the personal guarantee or the credit check. Okay, so again, there's going to be time and business requirements if you don't have enough trade lines to be able to get approved. You're also going to have a high enough credit score with Dun & Bradstreet or whoever it may be, whoever they look at, Equifax or Experian. But remember, those credit scores are based on how you pay. So as long as you're getting credit and paying your bills, then you're going to be rewarded with good scores. Also, keep in mind, to get to this stage, you also are able to get auto vehicle financing. One of our clients got $185,000 at Ford. No guarantee personally, no credit check. Imagine that, that's insane. No personal guarantee, no personal credit check, $185,000 approval with Ford. And Christine is her name. And you go to our YouTube channel, you'll see several case studies we've done with her where she's given us the results that she's getting. But how fast you go through this process depends on you. If you're working with us, this is like a selfless plug, I guess. Well, then look, it's going to be a lot faster, right? You're working with experts. We know with our technology and our advisors how this process works. We help you overcome obstacles before they occur. And our clients are getting to this stage in 6 months or less. But we found if you're using our free information, if you're going and using our forums and these type of things, it just takes longer. You can still succeed. It's just they average about 2 years to get to this stage. So again, it really comes down to knowledge. The more knowledge you have, the easier and faster you're able to make it through this process. But you can make it to this final stage from what our clients are saying in 6 months or less. So let's recap. Business credit means that personal credit is untouched, right? There's no inquiries on your personal credit report. Your business credit approvals aren't based on personal credit quality. Your business credit cards aren't being reported on your personal credit report, so they're not affecting your utilization, so your FICO score stays good. Okay, that's utilization is very important to keeping your FICO good. There's also no inquiries on your credit, which helps open up other funding options, and again, helps keep your FICO score intact. Building credit before you need it makes it easier and faster to get it. Because again, credit issuers and lenders don't want to lend you money when you're desperate. But when you're not desperate, it makes it easier to be able to get that credit, start building that credit profile score to help make you lendable when you do need the loans or credit lines. Okay, and that's why that payment history and credit history matter. But you got to build business credit the right way. We talked about a bunch of different ways to do it by establishing your credibility, getting your DUNS, getting your EIN, getting started with vendor credit, then moving to fleet credit and cash credit. So many benefits here. Remember, business credit is publicly available information, so it really does control your credibility. You can get these really high limit accounts, and because business credit is only based on how you pay your bills, your scores, it's very fast to be able to get as well. And really, it's one of the only ways you can use it to fund your business. It gets your business to fund itself. Another benefit I didn't list here is that anybody can get this. Anybody. Okay, it doesn't matter if you have a business, you can get business credit. You could live outside of the United States and have a business in the United States and you can get it. You could be a nonprofit and still get business credit. You don't need cash flow to get it. You don't need collateral. You don't need to have good credit. Business credit is the only way you can get money for a business, but you don't have cash flow credit or collateral. So many benefits to getting this kind of credit to be able to use to fund your business. So you have questions? Give us a ring. 877-600-2487. 877-600-2487. If you give us a call, we will get you 30 days of free credit monitoring with Dun & Bradstreet and Experian. Then our advising team will go over the report with you. We'll pull your report, we'll go over it, we'll tell you some things you could do and give you some tips to improve it or some tips to start building it if when you pull that credit report and score nothing's there. Again, our number is 877-600-2487. And you can go to our website as well. We got a bunch of free training on the top right of our page, creditsuite.com. You can find our Instagram and our Twitter where we post tips daily. You can find our Facebook where we go live every week. Or almost every week. You can find our YouTube where we go live every week. You can even find our podcast to listen on the go. Like I said at the beginning, our goal is to help you get capital. And we do it by helping you improve fundability, by knowing what lenders and credit issuers are looking for and meet those standards before you apply, by building this business credit for your EIN that's not linked to your social. And we're also doing it to help you with all aspects of getting business loans as well. So feel free to give us a ring, 877-600-2487, or visit us online at creditsuite.com. Thanks, everybody. Have a great day.